What's going on, guys? Philip at Trade Genius. So the Federal Reserve has announced that it's going to give limitless support to the markets. In other words, infinity QE or QE infinity. So we're going to talk about how this is going to affect Bitcoin going forward. So let's dive into this video.
Trade Genius.
Really quickly, guys, if you are interested in joining the room with us, navigating these crazy markets, we'll show you how we approach it and how we do it. And up or down, we can still make money. So we have a special here, $2.99. Normally we don't do that, but because of all the craziness, we decided to lower it. And if you guys are looking for help and guidance, that's a great package to pick up at an extra discount. All right, so the Federal Reserve just pledged asset purchases with no limit to support markets. So what does this mean? Basically a barrage of new programs, open-ended commitment to keep buying assets under its quantitative easing measures. So they started this in the crash in 2008, called it quantitative easing. What does that mean? Essentially what they're going to do is take off assets from the big dealers being big banks like Citi, Chase, JP Morgan, and frees them up so that they can provide liquidity to the system. And what it results in is things going up. And so how we can quantify that is looking at a chart. You'll notice here in 2008, this is the big drop, and blue line is the S&P 500. The candlesticks are gold, and we're going to get to Bitcoin here in a bit and how this compares. But you'll notice that when QE was announced, gold basically came from that point on and just ripped, ended its 10-year long run up here and then came off. So you can see the effects of how QE initially floods the market with liquidity. People, because of the market sell-off, run into gold. Gold has a blow-off top. Chart looks very similar to what Bitcoin did at the end of 2017. But keep in mind, this was the end of a 10-year bull run in gold, starting with the ETF that in the early 2000s, which got gold really to the masses into 401ks and things like that. So as you can see with QE, and now especially with infinity QE, ultimately we're probably going to see the market bottom out and then start to grind higher. Now, this 2008, which was largely a bank crisis problem of their own doing. And when these events happen, we call them black swans. It comes out of left field, takes everyone by surprise, triggers a lot of liquidations, causes crashes, and then you got to pick up the pieces. I'm going to call this event that we have here, right over here, this drop, a multi-vector black swan, meaning there's various attacks coming. We've got oil wars, we've got the coronavirus shutting down the GDP of all the countries around the world because their economies can't function because everyone's locked down. And I'm not saying that's a bad thing. We're just using the science and data and saying that that's really the prudent course. Unfortunately, the side effect is that we're all locked down and everything's coming to a grinding halt. And then you also, on top of that, have $500 trillion worth of market derivatives that are leveraged. So you have $500 trillion of leveraged derivatives in the system that are going to unwind when things like this happen. And so what does the Fed do? They said, we'll print as much as we need to. Open-ended. Sky's the limit. There's no limit to this. So what you will see is initially, yes, we have some deflation, right? Because of the crash, that's going to pivot to hyperinflation. And, they're picking their poison here. Do you go into a Great Depression or do you pick basically a delayed reaction into inflation? And that, I think they've trapped themselves here in that corner. So what does Bitcoin do? Well, in the era of QE, if we turn on what Bitcoin looks like, all right, I have to put Bitcoin on a logarithmic scale because the size of the move is really, really insane, right? We go from under 10 cents as far back as we can chart it in TradingView, and we peak out just under $20,000. So as you can see with Bitcoin in the era of money printing, it's just gone up, right? So it didn't really see the huge sell-off midway through like gold did. It grinded right through that, actually. So while gold was finding a bottom, Bitcoin was just grinding up, had its blow off top, and then this small section here looks a lot like the larger picture of gold. So gold makes the move in a lot slower scale speed than what Bitcoin does. But I think this basically tells you that in the area of QE, you saw Bitcoin go from 0 to 20,000, and largely this area was Bitcoin undiscovered, right? Bitcoin started to come more mainstream in 2017. And then you saw the quick spurt, mostly on retail, mostly retail-driven traffic up to 20K, and then it blew off there. So now we're getting into where demand is going to grow exponentially for Bitcoin. The investment grade money is going to be coming into Bitcoin, and maybe not so fast right now because we're dealing with basically going into a recession, and if or a mild depression if the numbers don't improve and we're stuck in this state of shutdown for an extended period. But the money after this settles down and things mellow out, that money is going to come. On top of that, we have less production, right? Because of the halving. So production will be cut in half. It's a deflationary mechanism or a disinflationary mechanism built into Bitcoin, part of the code. So about every 4 years, the production gets cut in half. And it'll continue to do that until all the Bitcoins have been mined. So you're going into rising demand. So, the stock to flow that we talked about, that's going to go up. That ratio is going to go up. It's going to be that of gold, except that you're taking the stock to flow ratio of gold, but saying like there's only just so much gold being made. And most of it's been accumulated already. And you're just going to get the little bits that are coming out of the ground right now. And that's it. But there's only so much to go. I mean, so there's a finite amount. So the math for Bitcoin as it stands, never mind infinite QE, would have it going to six figures relatively soon. Now with infinity QE and inflation pumping into the system, I think that actually makes these numbers that we're talking about in stock to flow and going to six figures, some people throwing out $1 million at some point for Bitcoin. Again, that's due to the scarcity, but you pumping in unlimited amounts of liquidity to the system, you're basically saying economic cycles don't matter. All that matters is that things just keep going up, and we're just going to flood it as much as humanly possible for as long as we need to. That's just going to turn into inflation, and that's exactly what Bitcoin was built for. So QE infinity, probably the most bullish thing that could have possibly happened for Bitcoin, why it was even created. Okay, so it's a big hedge against inflation, and we're starting to see all of that start to come to a head here. And it may not happen instantly, today, tomorrow, but we're talking like over the course of the next couple of years. I think especially you're probably going to see the effects of that really take hold into the price of Bitcoin. And I think gold too, for that matter. It's just that gold's not going to move the way Bitcoin will. Bitcoin can move 20, 30 to 40,000, and gold might be going up to 3, 4,000. So the moves are going to be astronomical compared to gold, but I think it's going to happen. I think it's inevitable at this point, considering how they've decided to handle the monetary policy of not only in the US, but around the world, central bank coordinated monetary policy. So there you have it. That's my take on what this means for Bitcoin and the price of it, as well as gold for that matter. I think it's going to be, hard assets are going to be king going forward. You're going to have to hedge against inflation because I don't think there's any way out of that now. They've basically put a stamp on that. We will have inflation, maybe hyperinflation going forward, and it's not going to be good for the future generations. So get them some Bitcoin, put it in a trust. I think that's going to go a long way. I think that's the best way to hedge against this stuff, hard assets. All right, guys, I hope that helps. If you have any questions on this, please leave them below. We really appreciate you guys watching our videos. Again, if you'd like to join us in the room, head over to tradegenius.co. You can sign up there. $2.99 gets you in the room with us for a year. I'll see you on the next video, guys. Thanks for watching. Bye-bye.
Trade Genius.